What's up, guys? Welcome back to DCA. What we're going to do in this video is take a look at Ethereum again. So in the last video we made, we talked about Ethereum by looking at it through the lens of its realized price. If you didn't see the video, the realized price is essentially the average price at which holders own Ethereum. And this is based on-chain metrics by looking at Ethereum at the last time that it has moved on the network. So what this metric is called the volume profile visible range. And what this does is it tells us how much Ethereum has been traded at every price level. So if you look here, I'm looking at right at around $300. And at $300, you can see that on this horizontal axis, that shows us how much volume was traded at that particular price range. So what this does is it gives us a very clear estimation of how much support or resistance there may be at any given level. Because as you come down into a place where there's been a lot of volume, that is going to tend to form a support level, right? And as you're coming from below to the upside, if you run into one of these places where there has been a lot of prior volume, that is going to act as a resistance level. Because just statistically speaking, there are more holders of the asset at that price. So I want to just quickly show you how it works though. So we're going to look at an example from 2017 into 2018, and then we're going to go look at the price right now and look at the volume profile visible range, where we're at right now and what that may tell us. So the way you'll look at this is when we're just looking at this graph here. So we're looking from April 2017 all the way through January of 2018. And just one thing sticks out right away, and that's that we have these areas that have formed large quantities of volume. Specifically, right in kind of this region here, you see that there's been a ton of volume traded, okay? So, you can see that right here, right at this $300 level, there has been a significant quantity of volume there. Realistically, the area might include all the way up to here. So anywhere from around $200 up to around $476. And mind you, we're trading at around $1,200 at this time, okay? So there's some volume up here at around $700. As I'm looking at this chart to start to analyze the price, I'm going to look at the levels and see where we may have a lot of support at. So I'm seeing 3 or 4 distinct levels here. Right in this area at around $700, right in this area from around 2 up to around $400. And then another 2 areas here at $90 and another area down here at around $50. So as we come forward, if the price starts to correct, I'm first going to look for there to be support for the asset at this $750 level, okay? If that breaks down, then I'm certainly looking at this area and definitely at this $300 range down to around the $200 range. So as we're coming forward, you see we correct, and where do we correct down to? It's right to this place where we just said, right down to this $700 level or so, right? And you'll see that we kind of trade in this zone for a bit, and then we eventually fall through this area. Where do we fall down to? We drew out 2 distinct areas where we're looking for there to be support and resistance. So after we've now dropped below this area and we're coming back up to it, like you see right here, I'm going to expect that $600 up to $750 or $800 range to be a level of resistance now. And remember, when we're looking at this data right here, we're only looking at this data. We don't know the volume in the future. We're only seeing the volume through right here. The metric will update as we go forward. And as we do that, we see we get this resistance off of this level. And now I'm expecting this to act as an area of resistance as we're coming up to this level. And sure enough, we go into that level, and that's where we get rejected, right in this area. And it's for the reason that I just mentioned. The people that were at a loss, that bought the asset, they FOMO'd in up here, $700, $800, $900. They were all the way down to around $300 at one point. And then when we come back up to their cost basis, they are happy to get out of the asset at even. Okay, so that's what they do. And that's why this acts as an area of resistance. Now we come back down, we come back down into this range, and where do we bounce? Right at this bottom level that we drew for ourselves. So right around here, that's right where we get our bounce, okay? So just as predicted, we come down, we ride in this range for a time, okay? And then we eventually break through it. Okay, so now recall what we said. after this $200 level, where is our next area of support? And we'll just come back and look here. We have two of them. We have one down here. So realistically, it's about 100 down to maybe around $75. And then we have another one down here from $50 all the way down to $40. You can see that this third level actually acts as the area of support for the asset when we reach our maximum level of capitulation. So all I've done is, I drew these support levels from the areas that we formed during the bull market. So we formed this area during the bull market phase. So we got this level based on what we did only with the data from the bull market. That's all we needed, because we wanted to see, based on the people that were FOMOing into the asset, where were they holding at? Because they are going to be the ones that are forming the areas of support and resistance. So now we're talking about long-term holders. These are people that have been in the asset since the beginning, essentially. Not quite the beginning, but they're going to be early adopters of the asset. So once we come down to their level, they are going to form a very strong level of support. And sure enough, that's exactly what we see. We saw that this area right here acted as a support level, not once, but twice. So here in 2018, and then again here in March of 2020 during the COVID capitulation event. All right, so that just goes to show how powerful this kind of metric can be. And then notice that this area acted as an area of resistance. It acted as resistance all the way until the bull market started right here for Ethereum, essentially in November of 2020, heading into December. All right, so using this metric, you can identify very clearly where you're going to encounter areas of support and resistance. So this is showing you areas of probability. It's showing you that if the bear market continues and you're in this level, let's say, and let's suppose that this market didn't turn around in 2020 and something happened in 2020 that would make the market continue to be bearish. COVID happened and there was no sort of Fed money printing. Well, we could have then potentially seen Ethereum drop down into its next support level. So these levels that we're drawing are good to draw out for yourself, because they can show you where the asset might head to if a bear market continues and if it becomes more severe than you may have expected. It just gives you an idea of where you're likely to meet areas of both support and resistance. So now that we're in a bearish stage of the market, it's good to identify where the areas of support are going to be as we're in a downtrend. All right, so when we come over to this market cycle then, now you'll notice that the distribution of the volume throughout this market cycle, it's fairly even, it's fairly uniform, but there are a few areas which demonstrate significantly higher volume. And ultimately those areas are going to form right here from around $1,900 down to $1,650. And then from right around here, $1,400 all the way down to maybe around $1,200. And remember, we're not trying to be ultra precise here. We're just trying to find general broad areas where we may encounter support at. We're not trying to use this metric to day trade. And then we have another level that's right around in this area. So from around $600 up to around $750. Okay. So ultimately that's how we would then start thinking about if this bear market continued, if the economy entered into a recession, if assets were continuing to get sold off in the setting of this bear market that we're in, where might you expect the asset to go to? And in the prior video, we talked about the fact that when we were talking about the realized price, we said that the realized price of Ethereum right now is $1,800. So it's not coincidental then that we have a huge quantity of volume right at this $1,800 level, because this is the average price where all holders of Ethereum own the asset at. All Ethereum that's been moved on the network has on average been traded at around $1,800. So it's not coincidental that this is the level that is putting up a huge quantity of support for this asset, because this is the realized price of the entire asset. So what we're typically going to see is that you're going to form a large level of support right at around that level. And that's what we're seeing here. Because as we come down to this level, longer term holders of the asset, people that bought here, 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 and, all the way basically through the beginning of 2021, they are fighting to defend the asset at this price right now. On the other hand, you have a lot of shorter term holders, people that have just bought the asset within the last year or two. These individuals that bought up here, you're seeing a lot of capitulating from these holders who are more short-term investors that bought in at these higher levels and now are sort of capitulating. And we saw the same thing happen back here. Back in this prior cycle, we saw the exact same thing. And that's why we got these big support levels down here, because these holders of the asset were capitulating. So the people that bought at, 1200, the people that bought at 750, and then even the people that bought at 450. So that's why you saw us dropping tier levels from one high volume node to another high volume node to another high volume node, ultimately until we got down to this last high volume node where we held support at right down here. Based on all of that we just said, we can then see that from this market cycle, these are going to be our levels of support. So right now we're in a very strong level of support from around $1,600 up to where, the price is near its realized price at around $1,850. But then below us, we need to think about where are the support levels below us. And I think that two support levels sort of become clear. And also a low volume node becomes clear. And that's going to be right in here. You have this low volume node. And I do think that if we drop below around $1,600, you could see the price rather rapidly fall down to around $1,400. Okay, because that's where our next significant volume level is. Also, you have these support levels like right here, like this low that we made that was at around 1650. So I think if you start to lose some of these levels, then you're going to see us drop down to this level. Now below that, and these are more severe circumstances. So if we lost this range right here and the price started to fall, you could ultimately see us head down then to this next support zone, because there's a relatively significant low volume node here, at least with relation to this market cycle. There may be some volume that occurred here back in 2018, but that's ultimately going to be rather insignificant because a lot of those people will have sold the asset by now. So you have volume right in here, right at this $750 level. And that's very likely where the asset could head if we were to start dropping below that $1,000 level. That $1,000 level is significant not only because it's a psychologically significant level. People like to trade on, round numbers. So I do think we would hit support here for a significant amount of time. But also, there's not much volume below it, and you would tend to see the price fall quickly in this zone because there's quite simply not much volume here to support the asset. So this is just a framework, guys, to start thinking about where prices can go. And trust me, I think I just clearly defined for you how this metric works. People say things like it can never go back to this price. People said that we could never go back to $1,800 when I made that video talking about the realized price back in January or February. We talked about it's, very likely going to go to $1,800. If we head into a bear market, people didn't like that. And here we are. So it doesn't matter if you like it or not. It's objective data. You need to understand why these things work, first of all. Understanding why these levels are significant is important. And we're not just showing you technical analysis here. We're showing you this is all investor psychology encapsulated on these charts. So that's going to be it for this one, guys. If you guys like this type of content, hit like and subscribe. And until next time, as usual, see you.